Subscribe to my channel Report Stock.
Welcome to the Deep Dive, your fast track to getting informed. Today, we're looking closely at a name many of you know, Dave & Buster's.
That's right.
We'll be digging into their latest Q2 earnings report that's for July 2025, and also some investor outlooks. Our goal here is really to unpack those numbers, figure out the context, and explore what it might mean for Dave & Buster's and maybe the wider restaurant and entertainment world.
Definitely a lot to talk about there.
So let's just jump right in. Dave & Buster's seems to have really stumbled in Q2. Big misses on earnings and revenue estimates, right?
Yeah, it was quite a miss, a substantial one, actually. Their earnings per share, the EPS, landed at just 40 cents.
40 cents, okay.
Now, you have to compare that to the Zacks consensus estimate, which was 88 cents.
Wow.
So that's a negative earnings surprise of over 54%, minus 54.5% to be exact.
That's huge.
And, just for more context, that's also way down from the $1.12 per share they reported just 1 year ago. So it's a pretty sharp downturn.
$1.12 down to 40 cents. It's great, the nosedive. And this isn't just a one-time bad quarter, is it? Haven't we seen some weakness before?
You're absolutely right. This wasn't an isolated incident. Dave & Buster's also missed earnings expectations in the quarter before this one.
Ah, okay.
And looking back over the last 4 quarters, they've actually only beaten the consensus EPS estimate once.
Only once in 4 tries.
Exactly. And on the revenue side, it was a similar story, though maybe not quite as dramatic. They brought in $557.4 million. The estimate was $557.1 million.
Okay, so a tiny bit below the estimate, essentially flat versus estimate.
Right. But again, similar to earnings, they've only managed to top revenue estimates once in those same last 4 quarters. That lack of consistent, upside, it does raise some questions.
Yeah, these repeated misses, they start to paint a bit of a concerning picture, don't they? So how's the market reacting, especially when you look at the broader market like the S&P?
Well, the market hasn't been too pleased, as you might expect. Dave & Buster's shares, they've actually lost about 19% since the year began.
19% down. Ouch.
Yeah, and that's really stark when you compare it to the S&P 500, which is, up around 12% over that same time frame.
Big difference.
It is, and it naturally leads to the question, okay, what's next for this stock, given that kind of divergence?
And usually, for investors trying to figure that out, a lot of the clues are in the company's own outlook and maybe more importantly, how analysts are adjusting their future estimates, wouldn't you say?
Absolutely. Those estimate revisions are key. For Dave & Buster's, the picture there was a bit mixed.
Mixed, okay.
Which resulted in it currently holding a Zacks rank #3. That's basically a hold rating. It suggests the shares are kind of expected to perform in line with the broader market going forward.
So not necessarily expecting further decline, but not a strong buy signal either.
Exactly. But there's another really crucial piece here. The industry context. The retail restaurant sector, where Dave & Buster's sits, well, it's currently ranked in the bottom 30% of over 250 Zacks industries.
Bottom 30%, that's pretty low.
It is. And historically, industries in the top half tend to outperform those in the bottom half by more than 2 to 1. So it's like swimming against a pretty strong current right now for companies in that space.
Right, so even if a company is doing okay internally, a struggling sector can really drag it down. It does make you wonder if anyone in that sector is managing to buck the trend.
That's a really good question, and it brings up an interesting comparison. You could look at an industry peer, maybe someone like Domino's Pizza.
Okay, Domino's, different model, but same broad sector.
Exactly. Now, keep in mind, Domino's hasn't reported its Q3 results yet for the quarter ending September 2025. These are projected figures we're talking about, unlike Dave & Buster's actual Q2 numbers.
Got it. Projections versus actuals.
Right. So Domino's is expected to report EPS of $3.98. That's actually down about 5% year over year.
Okay, so still a decrease expected.
Yes, but their projected revenue is $1.14 billion, which would be up 5.4%. And here's the really interesting part. Domino's EPS estimate for that upcoming quarter has actually been revised slightly higher by 0.1% over the last 30 days.
Huh. So even with an expected earnings dip, analysts are actually nudging their forecasts up slightly.
Precisely. And that little bit of resilience in analyst sentiment, it probably speaks to things like their strong digital platform and their efficient delivery model. Those aspects might insulate them a bit more from the dine-in challenges that are maybe hitting others harder.
That makes sense. So as we sort of tie all this together, what are the key things for you, the listener, to maybe take away from this comparison, Dave & Buster's situation?
Well, I think it really underscores how complex evaluating a company's performance can be. It's definitely not just about looking at the headline number, like that big earnings miss.
Right.
You have to dig into, yes, the earnings misses, the consistency, but also those broader industry trends. How is the whole sector doing? And then how does a company's specific business model, like delivery versus dine-in, fit into that? Even those, subtle shifts in analyst estimates tell a story.
Exactly. So the real takeaway is probably the need to look beyond just revenue and EPS. You really need to understand the nitty-gritty financial details, what management is saying, and those powerful underlying industry currents that can lift or sink companies.
Couldn't agree more. And maybe a final thought for you to chew on. How might all these different pieces, the company's own results, the industry headwinds, those analyst revisions, how might they play out in the companies that you follow personally?
Yeah, what really jumps out at you when you contrast a company maybe struggling within a difficult sector, like we see with Dave & Buster's here, versus a peer like Domino's that seems to be showing, well, a different kind of resilience. It's definitely a fascinating puzzle to think about.
Subscribe to my channel Report Stock.